Yeah, man. All right, y'all. Hold on. Just give me 2 seconds and let's get the show started. We'll get the show started in just a few seconds. Just a few seconds. Gotta get my headphones and everything working. All right, we might have to try that one more time. I think shit kind of messed up on. Did y'all get that? Check. Let's try it again. All right. Let's see it. All right. Well, we got a little impromptu show. I'm waiting on Crypto Tony, the one and only. And I'm trying to see if I can get my little headphones working here. Now give me 2 seconds. 2 seconds. All right. There we go. All right. We got the audio. All right. So today's show, impromptu show, and make sure the audio right on, We get into a quick show just talking about stock dividends and crypto dividends. You know what I'm saying? Getting you interested in seeing some information about it. I looked up a little information on investopedia.com, which is always our little trusted source. You know what I'm saying? To go to for crypto and stock related knowledge. And let's see. And crypto dividends really is crypto staking. You know what I'm saying? So it's two different terms. In the crypto world, you would stake your money, and then you have to stake it for a certain period of time. Let me see something else really publish. That's how I'm gonna tell it off. I mean, I like the background music. You know what I'm saying? All right, you can hear it. All right, so it is a difference. So it's a difference between the dividends and the crypto. You know what I'm saying? You know, in crypto, you have to stake your money. You know what I'm saying? In stocks, you know what I'm saying? You investing into a stock in order to get a dividend off of the stock, the payout off of the stock. I got some money, some crypto stake. You know what I'm saying? Which you got to be careful too, because I ain't pay attention to the terms. You know what I'm saying? Because I ain't doing what I'm doing right now. Hold on a second. Hey, now do it again. Time for the little fake little bullies in the damn neighborhood thinking they got something going on. So right here with that old bully crap. Man, they got no time for bullies, people. And you need to check your child, you know what I'm saying? And watch what they doing to other kids, you know what I'm saying? They come around thinking that people ain't watching. And they gonna sit up there and try to pick on little younger kids just because they ain't got nothing else to do. You know, spring break, you know what I'm saying, should be in school, occupying their mind with some kind of knowledge. Instead, they want to be around here acting like they bullying something, you know. Yeah, man, don't be, yeah, well, good. Little big brother stepping in, yeah, yeah. No time for that. Nip it in the bud early, you know what I'm saying? Anyways, people, let's get back to what we was talking about, you know what I'm saying? All right, so let me give y'all a little rundown, you know what I'm saying? A little rundown. And we're gonna run it down with the little stock dividend comparison, you know what I'm saying? And you know, you might be interested in getting into dividends, you know what I'm saying? We are, so that's what it is. And what we do here on the Bitcoin and Mo show, you know what I'm saying? We are not financial advisors, do not give out financial advice, you know what I'm saying? We might give you some financial information just because Investopedia got the information, you know what I'm saying? And I'm reading the information. That's about as financial of information you're gonna get. And you can go to Investopedia.com and read the same stuff that I'm reading. You know what I'm saying? So it is what it is. But what we do here, you know what I'm saying? Shouts out to Nick out there that I met at the gas station last night. Gave me a follow for the show, so you're gonna tune in Monday. So whoever good shows tuned in, you know what I'm saying? For Monday coming up. And yeah, but like I tell him, you know what I'm saying? His generation is the generation that needs to be interested in this information. But at the same time, you don't just need to be making money and putting money into something that you don't first understand what's really going on. And the first steps of knowing what is going on is to find information on it. You know what I'm saying? And information is always key. And information is the power. You know what I'm saying? That's where you get power from. It's information. It ain't anything else. Money is not power. Power is in the information. You know what I'm saying? And learn how to get the money and make that money uh, multiply. You know what I'm saying? You just don't want to make money. You want to make money multiply. Because if you just make money and then take the money out and then go and spend the money, then what was the whole purpose? You know what I'm saying? Now you're back to square one. If you learn how to make that money and double it, then you could take that money that you know what I'm saying, that the profit that you made, then you want to spend that. But then you're still in the game because you still got your money in the game. It's all about staying in the game, keeping your money in the game. You know what I'm saying? Don't spend all your money. Keep some money in the game. Understand the concept that it's a game. All right. So anyway, understanding dividends. Uh, First of all, this is not verbatim. I'm gonna jump around and you know what I'm saying, read all around. If you want to know what the actual verbatim wordage is, you can go to investopedia.com and look up dividends, stock dividends. Just look up dividend and it'll pop up what I'm reading. You know what I'm saying? But first of all, they must be approved by the shareholders. You know what I'm saying? Who got voting rights? You know, just because you're a shareholder, sometimes you ain't got uh, voting rights. Obviously, it must be about to get kicked out. You know what I'm saying? But it must be approved by the shareholders by voting rights. Um, Cash dividends are common. Other dividends can be issued, which I'm talking about, which is stock, shares of stock. And then mutual funds and exchange, EFTs, which are exchange traded funds, can also pay dividends. So uh, it's basically a reward paid to the shareholders for their investment in the company's equity, and it usually originates from the company's net profits. For investors, of course, it's an asset. You know what I'm saying? Dividends represent an asset. And for the company, yeah, of course, it's a liability. I'm giving you, you know what I'm saying, money that I could have, you know what I'm saying, kept myself. Um, Profits can be kept within the company as retained earnings to be used on the company's ongoing and future business activities, and the remainder can be allocated to the shareholders as a dividend. You know what I'm saying? So you get a payout. That's what dividends is all about, receiving profit from you know what I'm saying, putting your investing in that particular asset that they want you to invest in. That's what they offering it. Um, Companies still make dividend payments even when they don't make suitable profits to maintain their established track record of distributions. And some companies can go down, you know what I'm saying, from doing that if they allow it to go too steep and they're not making profits. The board of directors can choose to issue dividends over various time frames with different payout rates, and they can be scheduled at different frequencies, such as monthly, quarterly, or annually. And they use Walmart and Unilever as examples. Say they make regular quarterly dividend payments. So, hey, you can get in where you fit in. You know what I'm saying? If you know what to invest in. Companies also can issue non-recurring special dividends, either individually or in addition to a scheduled dividend. And their example is United Bank Corp, who declared a 15 cent per share dividend on February 23rd, 2023. Damn, 15 cents on every share. That's a big jump, people, depending on how much money you putting in. You know what I'm saying? The small numbers, big digits, you know what I'm saying, when it really comes down to it. Dividend paying companies are larger, established companies with predictable profits. Um, and the best ones to go with, usually the ones that specialize in basic materials, oil and gas, banks and finance, healthcare, pharmaceuticals, and utilities. Um, that's all the wonky stuff. Wonky stuff. Couple of definitions to get into our announcement dates. You need to know the ex-dividend date, the record date, and the payment date. The announcement date, of course, is when the dividend is announced by the company. That's the announcement date or the declaration date, and that's the date that it must be approved by the shareholders before anybody can get paid. So before they can get paid, goddamn, it has to be approved by the shareholders. Um, the ex-dividend date, which is also called the X date, is the date that the dividend eligibility expires. So if a stock, this is the example, if a stock has an X date of Monday, May 5th, And shareholders who buy the stock on or after that date will not qualify to receive the dividend. So May 6th, you don't get nothing. But shareholders who own the stock a business day prior to the X date on Friday, May 2nd or earlier will qualify for the distribution. So, you know what I'm saying? Because of that weekend, they still get they still qualify and get the dividend rate. So you got to make sure you pay attention to the X date and get in there before it expires. Which I done missed a couple of times just because I ain't understand these terms right here. The X date, it's an X date to these damn stocks. You got to get into these dividends. You know what I'm saying? But it's all good because it ain't about what you know, it's what you know. You know what I'm saying? And what you do with the knowledge that you know. And go from there. Also, you got the record date, which is the cutoff date, and that's established by the company to determine which shareholders are eligible to receive a dividend or distribution. That's the record date, which is also called the cutoff date. And then you got the payment date, which is when the company issues the payment of the dividends on the payment date. So that's when the money gets credited to investors' accounts. That's when everybody go home happy and make money. So this is a little example they give on how dividend affects a stock share price. So if a company is trading at $60 per share, they declare a $2 dividend on the announcement date, right before they, you know what I'm saying? So as the news becomes public, the share price may increase by $2 and hit $62 because everybody like, oh snap, they're giving a $2 dividend. So boom, people gonna try to jump in, you know what I'm saying? Get that little $2 guaranteed bump. If the stock trades at $63 one business day before the ex dividend date, on the ex dividend date or the X date, it's adjusted by $2 and begins trading at $61 at the start of the trading session on the ex dividend date. Because anyone buying on the ex dividend date will not receive the dividend. You know what I'm saying? Of course, you missed that $2 bump, but still a good chance to get back into it because it only went up. You know what I'm saying? $1, and they pushing the stock up. Still got this a whole bunch of stuff to watch and all those signs. You know what I'm saying? And of course, with dividend payouts, that's a key factor to be looking at. So why do companies pay dividends? Dividends are often expected by the shareholders as a reward for their investment in the company. And there you go. It maintains trust among the investors' trust. It helps maintain investors' trust. High value dividend declaration can indicate that the company is doing well and has generated good profits. But it can also indicate that the company does not have suitable projects to generate better returns in the future. So that's, you know what I'm saying, up and down. Therefore, it is utilizing its cash to pay shareholders instead of reinvesting into growth. So there you go. Now, let's see if we can get into some old little wonky information. Funding the dividends. Dividends are paid by funds such as bond and mutual funds and are different from dividends paid by companies. Funds employ the principle of net asset value, NAV, which reflects the valuation of their holdings or the price of the assets that a fund has in its portfolio. So the regular dividend payment should not be misunderstood as a stellar performance by the fund. It's because they're giving out a lot of money. That don't mean that the stock is doing good. So they give an example of a bond investing company fund may pay monthly dividends because it receives monthly interest on its interest-bearing holdings and merely transfers the income from the interest fully or partially to the fund's investors. So they just basically paying y'all off of interest. That don't mean that the actual company is doing good. It's just that that fund, you know what I'm saying, is making interest off of it. And depending on the amount of money that they invested into it, you know what I'm saying, yeah, they can get a big interest rate off of it. And so now they just using the interest rate to make it look good, you know what I'm saying, to make it look as if they paying out a lot of dividends to make it if the stock is doing good. So stock investment fund pays dividends from the earnings received from the many stocks held in its portfolio or by selling a certain share of stocks and distributing capital gains. So, are they relevant? It is the whole thing. Well, according to economists Merton Miller and Franco Modigliani, one of them, Magligliani, something like that. You know your name, Franco. Argued that a company's dividend policy is irrelevant and has no effect on the price of a firm's stock or its capital cost of capital. Shareholders may remain indifferent to a company's dividend policy, as in the case of high dividend payments, where an investor can just use the cash received to buy more shares. So if a dividend payout is lean, an investor can instead share shares to generate the cash they need. In either case, the combination of the value of an investment in the company and the cash they hold will remain the same. So Miller and the other dude, Michael Alani, conclude that dividends are irrelevant and investors shouldn't care about the firm's dividend policy because they can create their own synthetically. However, dividends remain an attractive investment incentive with additional earnings made available to shareholders. So people still don't give a damn what they said and they still investing in it. You know what I'm saying? All right, so this is what we get down to, the bread and butter, how to buy dividend paying investments. That's what everybody want to know. Man, you done read all that. How the hell do we get into how we put some money on that? This is how you put some money on. All right. Investors seeking dividend investments have several options, including stocks, mutual funds, and then EFTs, exchange traded funds. The dividend discount, I'm reading this verbatim now because can't dance around some of these words, you know what I'm saying? The dividend discount model or the Gordon growth model can help choose stock investment. These techniques rely on anticipated future dividend streams to value shares. What the hell is that? The Gordon growth model, the GGM defined. Yeah, you can't just gloss by shit. Sometimes you don't know what the hell it is. You know what I mean? If you don't know what the hell it is, click on it and find out what the hell it is. If y'all know what the hell it is, that's what it is. You know what I mean? And by the way, y'all tuned into the impromptu show, you know what I'm saying, right here on the Bitcoin and Mo show, crypto toning, somewhere in the stratosphere, you know what I'm saying, might pop up in here as we try to get ourselves psyched up to get some to invest into some stock dividends, you know what I'm saying, for whatever period, you know what I'm saying, just to see what it'll do for our money. You always got to diversify your funds, people. Don't never put your eggs in one basket, you know what I'm saying. So the Gordon growth model, GGM, is a formula used to determine the intrinsic value of a stock based on a future series of dividends that grow at a consistent rate. So the formula used to determine the intrinsic value of a stock based on a future series of dividends that grow at a constant rate. So it assumes that dividends grow at a constant rate in perpetuity and solves for the present value of the infinite series of future dividends. So because the model assumes a constant growth rate, it is generally only used for companies with stable growth rates and dividends per share. These some key takeaways. It assumes that a company exists forever and that there's a constant growth in dividends when valuing the company's stock. I don't know how the company's gonna exist forever and shit. Companies, shit happens and companies go down. You know what I'm saying? Um, but it works by taking an infinite series of dividends per share and discounting them back to the present using the required rate of return. It is a variant of the dividend discount model, and it's ideal for companies with steady growth rates, given its assumption of constant dividend growth. And it's a long ass formula. P equals D over one, D to the one over R minus G. P equals current stock price. G equals constant growth rate expected for dividends perpetuity. R is for the constant cost of equity capital for the company or rate of return. And D1 equals the value of next year's dividends. All right, y'all want to get more wonky, man? Go on the investopedia.com and look up the Gordon growth rate model. Oh man, I done clicked off everything I was supposed to be doing. Damn it! Damn it! Clicked off what I was supposed to be doing, y'all. Not bad. All right, we're gonna take one little quick musical break, man. You know what I'm saying? Yeah, I got music on here. You know what I'm saying? I'm gonna take one quick musical break. I gotta get this started real quick. Yeah, right back at you. It's Six Queen. Six Queens. Check out on all social media. Six Queen is the number six IX Queen. She out of Toronto, Canada, on top of Ontario and all the other parts. And she got all kinds of good music. You know what I'm saying? You can always check her out. Playing live on Regular Game Radio. You know what I'm saying? WDGE Radio dot space. And back up in your face. All right, so check it out. Let's get into the counterpart of dividends, and that's staking. So a lot of y'all got your crypto. You might just have it sitting around. You know what I'm saying? You done made money or taking it, just letting it then try to make money off of the movement. But you also can do what they call staking. You know what I'm saying? I actually have on one platform. I think it's Coinbase. I have my I have let's see. Let me see what I got staked. I can tell y'all right now what I got staked. All right. Let's see. All right. So I have Ethereum staked and I have Cosmos staked. So and Ethereum is at 2.83% APY, and Cosmos is at 9.22 APY. So, and that's annual percentage year, annual percentage year. Let me look up damn APY real quick. That's what we do, people. You ain't sure, look it up. And annual percentage yield. There you go. Effective rate of return on investments and interest into an account. All right. Annual percentage yield. There you go. All right. So I told y'all we learn what we learn. You know what I'm saying? That's how we do it on this show. You know what I'm saying? We learning as you learn. You know what I'm saying? Let's make it powerful, man, because we all learn together. Uh, Staking is a process in which cryptocurrency holders lock up their funds as collateral to support the operations of a blockchain network in exchange for rewards in the form of additional cryptocurrency. It's a popular way for cryptocurrency investors to earn passive income while supporting the security and decentralization of blockchain networks. The easiest way to start staking crypto is through a staking platform, which simplifies the process and offers competitive rates. These platforms usually have a user-friendly interface and handle the technical aspects of staking, such as maintaining network nodes and validating transactions. Some of the best crypto staking platforms can offer returns up to 20% or more per year, depending on the cryptocurrency and staking duration. See what I'm saying? So the one I just said was Ethereum was 2.8, 83%, but the Cosmos was 9.22. Let me see what Pro is. Let's see if they even offering it. And not everybody offers staking. You know what I'm saying? So you got to find the companies that offer the staking and offer. Those are the ones that are offering dividends. Let's see. No, that's it. I ain't. Let's see the Shiba. Let's see. No, they don't want a conversion. Hmm. All right. Well, anyway, those are my rates. You know what I'm saying? But you can get rates up to 20% more per year. But that's the thing. You know what I'm saying? Um, so before diving into staking, it's important to understand the basics of how it works. Therefore, here's the compiled basics every crypto enthusiast know and the structure this guide for the basic crypto staking platforms to answer the question most beginners have. Again, you can go to investopedia.com and learn more information about what I'm covering here. Let me switch up a little music here. Don't want to be talking over my rappers. You know what I'm saying? One time for the base RQ out there, GME Radio Spin, my dog DJ Trill holding it down. Mr. E up in there. It's a new recording and marketing studio down here in Tampa, Florida. So if you ever down here, you know what I'm saying? It's right off of 50th Street, Hillsborough and 50th Street. Go down to 50th Hillsborough, go to 50th Street. You're gonna make a left or a right, don't matter, because it's only one way to go. Go down about not even half a mile, maybe a quarter of a mile on the right hand side, and you see the building say the base SRQ, and you'll be there. Go inside and check them out. Got a nice vibe going on, nice studio and everything. So it is what it is. All right, so comparing the top crypto staking platforms. From the top, you got Coinbase. All of these have zero account minimums. Um, Coinbase coins available for staking 11, Bitstamp 11, Binance.us 27, KuCoin, KU coin 40 plus, and OKX 170 plus. Um, okay, so important to note. Several companies offering staking services for cryptocurrency have recently been forced to pause or cease their operations due to increasing regulatory scrutiny, particularly in the United States. And just because they got a bunch of, you know what I'm saying, staking opportunities, that don't mean that they legit coins. The SEC, which is the Security Exchange Commission, has indicated that the staking services may be classified as security offerings, which will require compliance with security regulations. And this has led to a cautious approach by some companies, highlighted the need for clear regulatory in the rapidly evolving world of cryptocurrency. All right, I got a call, very important call. I got to take it. I'll be right back. All right. Well, let's see if we're back. Let's see if we're back. We actually received the call, people. Can't believe it. One second. This is that. Man, that's it, y'all. With the bullshit. You know what I'm saying? They with the bullshit. All right, let's switch up this music, y'all. See if we back on the rocking. Where we at? Oh yeah, y'all hear me? I don't hear no music. Hold up, we gotta get the audio working. One second. It was doing good, people. It was doing good. Hold on. All right, all right. There we go. Should be back on. Back on. Yeah. My bad. I done kicked myself all the way out. I think I did. Let me see. I think I done kicked myself all the way out. My bad. Oops. All right. My bad. Let's see. Am I back? Okay, I'm back. I hear the music. All right. Let's get back into it. Um, tell you what I going right. Yeah. So you got to be cautious. You know what I'm saying? When you look at these companies, man, uh, because again, they got a lot of them out there that just they classified as security offerings, but they ain't following the guidelines and stuff. You know what I'm saying? And the regulations. So they can be basically they can just be taking your money. That's straight up what they saying. You got to be careful. You know what I'm saying? So go make sure you do your homework and you know what I'm saying, do your research and yeah. So these are all little uh, backgrounds. So well, let's see. Staking on centralized exchange can be a convenient option for users who may not have the technical expertise or resources to run their own nodes, or if you don't even know what the hell a node is. You know what I'm saying? Many exchanges such as Coinbase, Binance, KuCoin, Bitstamp, and OKX provide educational resources and support to help users get started with staking. So the building knowledge and careful consideration, staking can be a rewarding and potentially lucrative way to support the blockchain ecosystem while earning passive income. But it's important to keep in mind that staking on exchanges may come with potential risk. So you got to do your own research. Consider the factors such as staking rewards, lockup periods, and withdrawal transactions. So right now, if I try to take my money out, you know what I'm saying, it's going to tell me I can't take it out without some type of serious penalty. And then, or I can have to wrap it. And then you got to learn what wrapping your coins are, you know what I'm saying, wrapping your crypto in order to be able to move it. You know what I'm saying? Again, you got to do, your due diligence. You can't just go in and start putting money and then try to think you can flip money and then swap money and then you can go to try to swap money and then you ain't paying attention to the network fees. The network fees is where they're gonna hit you at, the gas fees. You know what I'm saying? Even moving $5 can cost you $30. You know what I'm saying? In gas fees. So yeah, you got to be careful in what you're trying to move, how much you're trying to move at one time. You know what I'm saying? And you got to watch all of that. It's your money, so you have to watch it and invest wisely. Crypto staking is viewed as the world's equivalent of earning interest or dividends on investors' underlying assets. Staking rewards come from the inflationary block rewards earned by validators for validating transactions. So to determine the best staking platforms, they've examined staking rates, minimum and maximum staking amounts, platform availability, lockup period, payout frequency, security, and regulation features. So you can go and, yeah. That's kind of weird, but they just stated that. But, this is something that you might want to know. While staking, the question was, can you lose money staking crypto? While staking is generally considered to be a low-risk way of earning passive income from cryptocurrency, it is not entirely risk-free. One way that stakers can lose money is if the value of the cryptocurrency they have staked declines significantly. In this case, even if the staker continues to earn rewards from staking, the decline in the value of the cryptocurrency may outweigh the rewards earned, resulting in a net loss. Additionally, if the blockchain network being staked on is compromised or suffers from technical issues, the staker may lose some or all of their staked cryptocurrency, which is why you should really, you know what I'm saying, keep most of your money in a crypto wallet, you know what I'm saying, and don't worry about, keeping it directly on the platform, because we've already experienced with Coinbase and Robinhood, these platforms are prone to, technical issues, and that can result in costing you a lot of money. Just saying. Make sure y'all check us out at on YouTube, man, at BTCNMO, the at Bitcoin and Mo Show, and my dog Crypto Tony, the one and only, at Unencrypted Crypto 8703. You know what I'm saying, in the place to be. And yeah, we get it in. So yeah, basically that's the two different steps. Stocks, you got a choice between stock dividends. And let's see if they do a versus. Dividends versus, and I'm doing this all off in Investopedia.com, people. Dividends versus staking. Now they ain't really doing no. Yeah, they ain't doing the comparison. Well, there ain't no comparison. So, but there it is. Depending on how your rate of knowledge, you might have more knowledge in stocks. You know what I'm saying? Therefore, find the companies out there that are giving dividends on their stock, invest in that. You know what I'm saying? Put a little bit in it. See the rates on how long you got to lock your money into it. Put some money that you ain't really, losing into it, and you ain't caring about, and can invest and make that step. You know what I'm saying? Take that first little $100 or whatever and put it there and put it in for a month. If they offer a month, put it in for the quarter. You know what I'm saying? See what it is. I'm locked in for the year, so we gonna see what Ethereum do in a year's time. You know what I'm saying? Let y'all know next year and what this other one do. It is what it is. It's in there now, people. Once you put it in there, that money's you already say you lost. You know what I'm saying? Because you don't have direct gain to it. And you do, and you don't. Because, again, there's no point of putting the money in if you're just going to take it directly back out. Even if it made $3, you know what I'm saying? That's not the point. You know what I'm saying? It's to actually make money and profit off of it. Leave your money in, take the profit off. You know what I'm saying? Reinvest the profit to make more. And then start drawing off the profit then. You know what I'm saying? But it's not to even make immediate profit off of it as soon as you put money into the game. You know what I'm saying? You don't just take that profit and go and just spend it. No. You take that profit, double back down, run it up again, and then you can use some of that profit, you know what I'm saying, to do, what you want to do. But that's investing, you know what I'm saying? That's the principle of investing right there. Is to always keep something in the game, you know what I'm saying? It's to never not have something in the game. You always really want to always have money ready to invest in a stock at all times, you know what I'm saying? Never have all, like currently I'm learning this, you know what I'm saying? I'm just giving you not advice. I'm giving you some information that I've already personally experienced. You know what I'm saying? And with my personal experience is I've already taxed out all of my funds, you know what I'm saying, through these various stocks. You know what I'm saying? To where I don't, if something really, really pop, you know what I'm saying, a good value come along, I don't have enough capital on standby to be able to double down, you know what I'm saying, and take advantage of that stock before I know it's going to raise back up. Such as Virgin Galactic that went down to $1.38, you know what I'm saying? But it's all good, invest what you can, you know what I'm saying? Put $5 on it. There you go. Give me 2 shares of it. You know what I mean? I'm in the game. It go up. You done made money off of them 2 shares. You know what I'm saying? And at $1.38, it was just up at $1.43. You know what I'm saying? There you go. You can make $2, $3 off of it. You know what I'm saying? Just to even see what it means to make profit off of a stock. You know what I'm saying? And how to buy and sell a stock. It's an easy, quick way. You can do that through Cash App real quick. Boom. So there it is, people. Each and every Monday, you know what I'm saying, I do Bitcoin. And hold on 1 second. I got a phone call. Kick me all the way out the show. Hold on, y'all. All right. Man, well, we back. All right, check it out. So, anyway, the only thing I was doing was wrapping up the show anyway. So, check out the Bitcoin and Mo show. Mondays, each and every Monday, man. 9 a.m. Eastern Standard Time. And we cover stock and crypto terminology and other related information. We're working on doing little pop-up shows like this, you know what I'm saying, throughout the week, just to bring y'all news headlines and stuff like that. Give y'all some quick news. Since we here, give y'all some quick news. How about that? News on the market news. These are the headlines. Index notch records. Apple slumps while Reddit jumps. And debut. S&P 500 gains and losses today. Index prints record close at Fed affirms forecast. Top stock movers are Chipotle, Equinix, Signet Jewelers, and more. As of March 20th, stocks climb to records, yields fall as Fed maintains rate cut forecast. And you can find more if you go to Investopedia.com and click on news. It's got all kinds of different headlines. Let's see what we can find. 5 things to know before the stock market opens. That was March 15th. Dollar Tree, Tesla, McDonald's, and more was moving. They were. Let's see. Give you some ETF news. Grayscale wants to launch mini Bitcoin fund amid the GPTC outflows. SPY ETF reaches record high amid NVIDIA fueled AI rally. Key chart pattern to watch. I'm investing in NVIDIA, so trying to see what the hell they gonna do. You know what I'm saying? They made some movements before, but as of late, they ain't been doing too much. I don't know what the hell going on. But I'm in it to win it, so you know. It is what it is. Let's see if we can find y'all a current. All this is as of January. So ain't nothing current. Let's see what's current. NVIDIA stock, yeah. BlackRock spot Bitcoin now holds more than $1 billion worth of Bitcoin. What? Oh, that's back in January. BlackRock's spot Bitcoin ETF, or IBIT, held more than $1 billion in Bitcoin just 5 days after it began trading. IBIT is the second spot Bitcoin ETF to achieve this milestone, with Grayscale Bitcoin Trust still dominating the market. Despite Grayscale's dominance, market data indicates funds are flowing out of their spot Bitcoin ETF into alternatives from BlackRock, Fidelity, and others. Analysts say retail investor demand for spot Bitcoin ETFs is modest, but that they may be because not all brokerages offer access to the product. Correct. Um, wow. Hmm. That's some good news for you people if y'all into spot Bitcoin ETFs. Hmm. All right. Well, anyways, bye now, then. You know what I'm saying? Y'all have a great trading day, man. You know what I'm saying? Be safe out there in the trading world. Uh, Trade and invest wisely. You know what I'm saying? Pay attention to your stocks. Pay attention to your investments. Uh, because again, the stock market moves up and down. You know what I'm saying? During the trading cycle, and crypto moves 24 hours a day. So it ain't no telling what it can do. It's so volatile. It can be up 1 minute, down the next, and around and around and around again. You know what I'm saying? So tune in Monday, you know what I'm saying, 9 a.m. Eastern Standard Time, Bitcoin and Mo Show, week number 17. Over 170 words covered, people, and terms and definitions, all new each and every week, you know what I'm saying? So we're going to be definitely covering some dividend terminology, and, because that's where we transition into, you know what I'm saying? So, before we get out the door, let me hit y'all with that old outro.